insurance gives a financial risk mitigation. It tells you very clearly that you're stepping into a future and there is risk. The digital Avid Miner experience reaching you. It's a joy to invite my friend Joydeep Roy. He's a partner with PwC. He's the global leader for insurance and digital assets.
Yes, Ashish, and it's such a lovely name, Living Forward. You've heard of Fast Forward and all of these things. It's a lovely name. In fact, I don't know of anybody else who lived backward other than Benjamin Button.
Let's be very clear. All of us, through our life, in our personal life, with our financial life, with what we want to do with our career, what we want for our loved ones, we all want one beautiful thing called assurance, right?
That's right.
We all want assurance. Tell me, you will do it, na? I remember buying a fridge and a television after I got married. A lot of money spent that just over that time. And I asked him, listen, cheez achhi hai na? All that I was wanting was some assurance. And this gentleman tells me, चिंता ही मत करिए साहब, 2-3 साल तक टेंशन ही नहीं करना. मैं क्या बात बोल रहा है यार, 2-3 साल. So we all want assurance in life, dear friend. And I'm speaking to somebody who's an expert at insurance. Can you just take us through that? Where does assurance end and insurance begin?
In many countries, funnily enough, assurance and insurance are synonymous. In many insurance companies in the world, even in India, are called assurance. We have called names which end with assurance, so they are synonymous. But if you dig deeper, assurance is something which we all feel very comfortable with mentally, psychologically. It's like you tell, just to the example, we look for assurance from friends and colleagues and our superiors at work or family. But assurance is everything except the monetary part. And insurance is the sole aim of insurance is to financially bring you back to a situation which you were in before the disaster had struck. So insurance is entirely a financial instrument which has been created over 2,000 years, gradually, and therefore what we see today as insurance, where there's an amount of money which you expect.
So essentially, insurance gives a financial risk mitigation. It tells you very clearly that you're stepping into a future and there is risk.
There is risk.
And through monetary means, if it is going to help you, I'm going to mitigate that risk, at least monetary.
Monetarily, and that too only to bring you back to your earlier situation, which means no one can profit from insurance. It's not you can just come back. For example, if you insure your house, and the house breaks, you can't get the market value of the house, but you can get the money to reconstruct your house. So it's a mitigation tool. That's what perfectly put.
Yeah. And where did it all begin? Did it begin with houses or it began somewhere else? Where did it begin?
So it began, if you look at two kinds of insurance. Life insurance has to do with human beings, and the other is assets insurance, which is all your house and car and everything. Life insurance actually started about 2,200 years back. The Roman army, how did people rustle up armies in those days? They used to get all the farmers and all the other odd job laborers to come and say, hey, come on, we'll lead you to battle, you might die, but by the way, there's a lot of loot to be done, a lot of pillaging, and you'll get paid. But it is a fact that a lot of people died, and their families had no other means of sustenance. So within the Roman army, they started a pooling system. Where they pulled in their wages, the weekly wages, they pulled in some amount of it, and they made sure that money is available to go to families of people who died at war. So conceptually, the concept of insurance started in the Roman army. Realistically speaking, life insurance, real life insurance as we know about it today, which is institutional, which goes with actuarial tables, it started with Johannes Kepler. Kepler made the laws of planetary motion, came out of the first laws of this actuarial table. Yes, Kepler.
So Kepler is speaking of planetary orbits, and he's talking of actuary.
That's
Wow.
he came out the first official mortality tables on which the insurance that we know about today. But the Roman times, which we talk about, by the way, exists even today. These are cooperatives, these are mutuals, and some of these have developed into the largest insurance companies in the world, which are mutuals, which are based on the old Roman army principle of pooling in money and everybody having a stake in it.
Wow.
So there are two kinds
You're
of
actually the context of insurance, as I understand now, is actually pooling in risk. So people, everyone is pooling in a bit. So there are 2 points which came out very interestingly in this, and that's wonderful. One is that we are all pooling in. All right.
Yeah.
The idea is not to profit. The idea is to come back so as to what you invested or closer to that you get back.
That's right. I mean,
So-
not what invested. It's what you would need to have your lifestyle, exact same lifestyle as you had. So you might have invested much lesser, but everybody's investment is also there, and that comes in. It's not investment really, pooling. That's why I'm saying pooling. There's no gain out of it. Is that people pooling the money? 100 people pool in, one person dies, he gets a lump sum. Now that's the concept of insurance. Of course, there's an element of costs and administration and all that which have evolved over time.